Hey everybody, welcome to the Profit Strategies podcast. Tom Gentile with you here. Look who's next to me today. No, it's not Chris Johnson. Chris had to take the day off, so I brought in my trading partner, Mike Wade. Mike, how you doing, buddy?
I'm doing great, man. Thanks for having me on the show, brother.
Happy end of the month. I mean, it's been unless you're dealing in cryptocurrency, that's a whole different ballgame, but it has been with a couple of days, with a few days with the Fed decision or the Fed talking about raising rates. It's been pretty much a quiet month. What do you think?
Yeah, same. This inflation thing, this bells and whistles going off about high inflation. Today we had an indicator that came out and said inflation is higher than it's been since 2008, and yet the markets are rising. So it's a little perplexing.
Yeah. So, I mean, if you look at everything that we've talked about over the month, we looked at June being a green month with a little bit of, pullback. And that's pretty much what we got. Let me just let's throw a couple charts up, have some conversations about what's happened here in the week and in the month. And then I want to show everyone, what to do during a boring market and how I look at boring stocks and an approach to trading them. And then we'll end our podcast on, what you're looking at in the market as we head into this boring stock month. So I'm going to pop the screen up here real quick. Let me show everybody what it is we're looking at here. I've actually got the S&P up. Now, this is a 60-day chart, but I'm going to bring this down to a 20-day chart so that we're really just looking at the month. Right? This shows us all the way out to Memorial Day. And when I say boring, I mean, this is what I'm talking about. We've pretty much, we've had a little bit of a drop down, mostly run up. The area that I'm pointing out now, that's when the Fed came in and spooked the markets. But since that spooking, over the last week, we just had the markets just rise up. And here we go again, all-time highs on the S&P as we hit the end of the week. The 426 area we've been hitting, 426 half on SPY. I think the big kicker here, Mike, and you're an expert on this, is volatility. Look at the volatility on SPY. What do you think?
It's low, very low. It's low as it's been over a month.
So I think we're hitting lows for the year. And so it's important for people to realize is that, we're in the doldrums of summer. During that time, there's no news. No news is typically good news for Wall Street. And so when I look at this chart, what I see here is I just see the markets moving higher. We see this big drop down. Options premiums on the S&P 500, SPY, and a lot of the stocks in this group are as cheap as they've been. If you're bullish, you're an option trader, you're buying calls, or you're doing out of the money spreads. If you're bearish, you're buying puts or buying out of the money spreads, anticipating a jump in that volatility. Now, when's the jump going to come? I mean, what happened to sell in May and go away? Yeah. We did discuss that as a strategy in May, but we also talked about why that may not happen because of, the fact that we're coming out of the pandemic. The economy is really jump starting. And the other thing is, with interest rates so low, where else do you put your money? That's the big topic we've been discussing. Any additional thoughts on SPY? Where do you see this going, Mike?
Well, I think it's good. Well, I like support and resistance. If you look at that 425 level, that prior pivot, we're now 2 days above that key resistance level. And if we close above that, that's 2 closes above 425. I have it going to the next anticipated resistance level, which is about 430. If you look at round
number 2,
So if we get a couple of closes above this, I think we got a little bit of more upside. But I don't know.
I believe it. I believe it. And you know what? The other thing that we like to do on the program, and I do this on live casts. I do this on a lot of the stuff that I'm charting is I throw Fibonacci up there. Now this is typically not what I look at in Fibonacci, is looking at the last 5 days. But I threw it up here because it has been. I mean, the last 6 days in the market have really encompassed the whole month. We've had more movement in the last 6 days than we've had the entire month. So to say that June was a quiet month is almost an understatement.
Yeah, absolutely.
All right, let's look at the bond market. So TLT typically when the stock market goes up, the bond market goes down, but the bond market's been, really almost anticipating lower rates. But that wouldn't be the case if you look at what's happening in the month of June. TLT's gone from 138 up to 145. We're kind of pulling back a little bit, but TLT, guess what? Here's a weird one. We got more volatility happening in the bond market than we do in the stock market right now. Go figure.
That's weird.
So the other thing too is if you're looking at, in this case, the Fibonacci charts go back a month, so we can look at some of the stuff that's happening. You got 141.87 on TLT based on the low for the month, on the high for the month. That's a 50% pullback. Keep in mind, and this is to all of you that are watching this podcast or listening to it, keep in mind that the bond market, as this particular chart goes higher, yields go lower. As this chart goes lower, yields go higher. So this is an inverse chart of actual yields. So for the month of June, even though we've been talking about raising rates, as the Fed calls it, rates have actually dropped just slightly, and that's on the 20-year. This is going to vary a little bit when you look at, say, 3-year, 5-year, 10-year, 30-year, but the 20 kind of encompasses the 10 and the 30. And as you see, longer term rates just easing back a bit. I don't think that's an issue for the stock market. Quiet bonds, quiet stocks, and the stock market's been quietly moving higher. This one really interests me is that the U.S. dollar kicked off those lows down in the low 24s and got up into the high 24. I tell people I don't trade this, Mike. It's really not worth trading because of such small moves. We're talking about the most stable currency in the world, so to speak. But I look at this. I don't know if you do, but I look at this chart to try to give me an idea of what's happening with equities, what's happening with commodities.
I do too. I like to look at this and then take a look at the gold chart because there's an inverse relationship to the strength of the dollar and gold. So I always keep my eye on gold to see if there's a flight to safety going on, or is it the fact that the dollar got stronger and therefore gold got cheaper? So that's
we're gonna get to gold in a moment. Listen, but you know what? Let's talk about. I know you want to talk about this one, so I'm going to let you do a lot of the talking on oil and USO. We have been talking about USO, and we've been talking about this bullish pattern that starts in the middle of February and runs to about mid-July. And boy, it has just been just a really good trade. And here we are sitting on yearly highs again. I mean, we're hitting 50. We discussed last week that we expected 50 was going to be tagged here, and we thought it was going to be closer to July 4th. But here, I mean, July 4th, what? A little more than a week away, and here we are. We're hitting that round number resistance. Your thoughts on oil and USO?
Yeah, oil is hot, and if you look at the oil sector, the stocks that deal in the oil sector. They're all bullish. So it's the XLE is the ETF, the sector spider ETF that tracks oil companies. And so there's a lot of oil manufacturers in there. And you're going to see, it's really popped up over the last 5 or 6 days. Money's flowing into oil stocks. And Tom, one of the ones I'm looking at is Occidental. Unless you want to talk about this.
Oxy? OXY?
Why? Yeah.
They're on the screen.
This one's on fire. It's setting multi-year highs and.
Oh, yeah.
It's an extraordinarily bullish stock. This is the most bullish oil company in the bullish sector over the last 5 days, which is why I like it. If I have a bullish market prognosis, I look at the sectors that are the most bullish, and then I look at the stocks in that sector that are the most bullish of the sector, looking for the strongest of the strong, the leaders of the pack, kind of thing. And this one's just setting it on fire. I really like this one.
Amazing. This is if those of you who watch the podcast, this isn't news. This isn't new news to you. We've been talking about dirty energy, and we've been talking about oil for weeks now. That this is going higher. What we haven't discussed is, Mike, we haven't discussed Occidental Petroleum. This is a new one kind of on the board, but within that group, which is, and I'm with you, big moves to the upside, but. We've even gone and looked at, and we were just showing it a minute ago, making money using a stock like or an ETF like USO. I did a live cast right here, a live stream. It was I think it was about 2 weeks ago, and I showed putting on a USO trade using what's called a bull call spread. We're buying lower strike calls, selling higher strike calls. And I think I did a 1 point spread on this thing. Let me just go back to USO for a moment and show everyone what we're talking about here. So I put a 1 point spread on this. Bring this up. Buying the 49s and selling the 50s and doing that down here, all right, down in this area, down in the high 40s. And here we are. We're hitting 50. We're hitting the top end of my trade. Now, again, I put this on for, I don't remember what I put it on for, but it was cheap. I mean, we're talking about maybe 30 or 40 cents to make as much as $1. And so I'm sitting on potentially a double here on something that's moved from literally 48 to 50. So, that's a $2 move. That's about 4% on this stock. And yet I've got I'm sitting on potentially 100% return on a 4% move. And so that's where we spot those opportunities. This was a pattern trade. And then we create that low risk and potentially high return trade using options. And then it's just a matter of simply planning, executing, and managing that. So, this one's just moving on really well. Let's kind of, I want to finish up looking at gold. Let's take a look at gold because GLD is something that I'm an investor in. I don't just trade this stuff. I invest in it. And I got to tell you, it's been a rough June for anyone that's been anybody that got into gold in June as we were starting out the month right up here around 179 for GLD. And then it just, quickly kind of rolled over. Now, the big drop down that happened last week was a result of the Fed meeting. Since then, we've been kind of caught in a little bit of a range here. And I'm looking for this thing to kick out and get out above 168. You've got resistance now, short, monthly resistance, 170.25, 171.88, 173.50. These are all Fibonacci retracement levels. I really believe we need to get above at least that 38% and close above it before I feel comfortable with this trade. Because, if you just going back and looking at, let's bring this back 100 days. So we're looking at the 100-day chart. You can see thing has just been, up, down, up, down. We go back to last August. That was the highs that we saw in GLD and gold as GLD was trading at 195. All right. We came into the year at in the 180s. Now, this is February. You can see the February chart starts at 170, drops to 158. Then we had this nice rally that took us right back up to almost 179 before falling off again. And so as you can see, the long-term chart, we've come down and we've hit and we closed below the 61.8% retracement. But now we're coming back up again. This is really interesting. Remember I talked about that 160, the high 160s to 170. Again, that was based on that small Fibonacci chart. Well, if you look at the larger one, it too shows that we need to get above and close above 170.64 before we can get into resuming this trend. Your thoughts on GLD?
Yeah, I started trading this, when it tanked, when the Fed meeting came out and the US dollar got strong, gold dropped. And I threw on an iron condor. I put 2 credit spreads on this thing, anticipating a little bit of a sideways move, maybe a drift up. And so when I see things like this, I like to throw these credit spreads on. I think of them as selling crappy trades. Yep. Sell a credit spread where you don't think the stock's going to make it to. Do 2 of them, one above, one below. And then you got 2 credit spreads generating a really nice short-term return. So
let me mention this to everyone. I'm going to share with you how we find these stocks. I'm going to share with you a good, we're going to look at the Dow Jones stocks. They're some of the most liquid stocks out there. But we're in a month right now where everything's just kind of going sideways. And what Mike's talking about is something that really is a great summer. It's summer income is what I like to call it. And so I want to share that with you. But also keep in mind, next week on my YouTube channel, I'm going to be discussing my favorite meme stock strategy. And guess what it is? It's selling credit spreads.
Yeah.
It's selling short-term credit spreads on the AMCs of the world, the GMEs of the world, and those ones that have that high vol. But let's say you want to look outside of that area and see what else is really kind of moving sideways. Well, let's move over, and I'm going to show you a half a dozen stocks or so that are in the Dow Jones that are doing just that. Right? These are stocks right now: TRV, Walmart, McDonald's, Caterpillar, Nike. What do they all have in common? Well, I'll tell you what they have in common. They're moving sideways. Take a look at TRV for a moment, travelers. Look at the channels we have. So we have a long-term upslope, and we have a medium-term sideways strategy. Now, this is a 20-point range, but Mike, you know this. You can make money staying outside of that 20-point range, just selling those spreads.
Yeah, absolutely. Or even calendar spreads. There's different ways to do it, but sideways is it's like fine wine. Let it mature.
Here's Walmart. Take a look at Walmart. Yeah, so Walmart was at 148 and dropped to 126, but then it got in the range, and it got in the uptrend range, and then it just started going sideways. And we're talking about something that is in about a 10-point trading range and has been since March. Since March, it's traded in a 10-point range. That's Walmart. Look at McDonald's, right? Maybe I'm not eating there enough, Mike. That's the problem, because it's in a 10-point range too, between around the 225 area to, well, about 15-point range, 225 to 240 on the channel. And again, we're talking about since about the middle of April. All right. So what happened? It was, well, tax day wasn't April 15th this year. It was May 15th. But since April 15th, McDonald's has just been trending sideways. All right. Let's take a look at two more. So here's Caterpillar. And, everyone's worried about Caterpillar. Oh, China, the Caterpillar's going to get killed. Caterpillar hasn't done anything. In fact, the last time we saw lows lower than what we saw last week, you got to go back to February, because this thing's been caught between 210 and really the high's been about 240. But these are wide channels. These are wide channels on what I'd like to call expensive stocks. And so, the last one I'm going to mention, and then just your opinions, Mike, is Nike. So Mikey, look at Nike. I mean, 125 to 140, a 15-point range that really started back in March, and it's just been kind of moving back and forth and back and forth. Now, you got a gap up that happened today. Wow, I wonder what caused that.
Let me check the news here.
If you look at sometimes when you get the jumps up like that, those jumps will be because of things like earnings. All right. Again, if you're going to get a stock that's going to go from 135 to say 140, 150, 155, big jump in a day. But again, guys, as it's Friday afternoon and we're looking at the markets right now. 4 of those 5 stocks really do seem to have those channeling qualities. A really good thing that just came up is that how do you avoid the risk on these trades? And one of the first things I can think of, Mike, is know when these earnings are coming out.
Yeah,
and
exactly.
avoid them. Avoid the earnings, the earnings fear and the earnings greed that happens. And I'm sure you don't sell premium through earnings.
No, absolutely.
Unless you're looking at something else. If you're trying to sell boring stocks and sell premium on boring stocks are boring up until earnings, right?
Yeah, actually, probably 2 weeks before the IV starts rushing, and if you sell a credit spread, you sell premium, the premium gets more expensive than you sold it for, and you can actually lose money into the earnings announcement. So generally speaking, we don't do the 2 weeks before. We stay away.
Yeah,
because of the premium rush.
Yep.
Yeah.
So, Mike, anything on your radar as we finish out the podcast today?
Excuse me. Other than oil, there's a few other oil companies I'm looking at. If you look at Fang or Devon, all 3 of those stocks, Marathon Oil, all of those dirty energy companies, as you call them, Tom, are all rising. I think that's a place to look. Consumer discretionary is also another one of the hotter sectors right now.
Yeah, I see Fang right now on the screen.
Mm-hmm.
Volatility, price up, volatility down. Time frame? What are you thinking?
I think it's I'm at 30 days. I'm going to ride the wave. Let it run.
Okay. And my only glitch is that once we get through the 4th of July holiday, and I mean, this is going to be a summer, I think, that we're going to see travel like we've never seen before. So it's possible, and I'm with you. It's possible that this thing may ride farther than the mid-July time frame that our long-term patterns have. So good stuff, Mike.
Yeah, thank you, man. It is a hot sector, and like you said, people are getting out of their houses now and taking trips. And I know somebody on this call that's taking a trip. I just drove to Houston back this week. So
yeah. So hey, that reminds me that first of all, Mike, I want to thank you for being part of the podcast today and filling in for Chris. And guys, I will be unplugging a bit next week. So I will have a video for you. I told you I'm going to show you my favorite strategy for trading meme stocks. I'm going to show you exactly what I did this week with one of those meme stocks and ended up taking a full profit on that. So I'll be showing you exactly how I've been doing that strategy. It's almost a weekly strategy that I've been doing. Other than that, I got no live stream next week. I'm going to be on the road. And Chris is going to be back with our podcast for next week. So till then, have a great weekend. Mike, thanks again. Appreciate it, buddy.
See y'all later.
And we'll see you guys next week on my next video. Take care. Bye now.